and welcome to the Liquidity event. I'm your host, AJ, and oh shit, you're not Shane. Who the fuck are you?
I am not Shane. I'm
are
John
you?
Owens, and happy to be pinch hitting for Shane, although I don't have the hair, and that's the main difference here, among many.
Yeah, Shane is currently glamping somewhere between Texas and Los Angeles. So.
And AJ, could you name the states between Texas and Los Angeles for us?
I can actually. It's Arizona and New Mexico. Thank you.
Oh, wow. Good job. Good job. AJ has a reputation for her geography skills.
My geography is excellent, except when it comes to the northeastern United States and the midwestern United States.
So about 75% of the country right there.
I can tell you exactly where Turkmenistan is, but I cannot tell you where Rhode Island is. That is for sure. Yes, so John is our director of financial planning here at Brooklyn FI, and a great asset to the firm, and he's stepping in for Shane today. So very happy to have you on the show. John, you're our first non-AJ and Shane co-host.
I know. Long time listener, first time caller. Glad to be here. Yeah, no, I was excited. I was like, oh shit, I have to pretend like I listened to the podcast now and I know what they do. So that's what I've been doing most of the day.
It's okay if you don't get
broke up my break.
It's fine. So I have to ask, what are you drinking?
I am drinking a Yuengling Flight. America's oldest brewery, Yuengling, not too far from where I grew up, and so gotta go with the hometown favorite as I'm in my childhood bedroom for this podcast right now.
You love to see it. I'm drinking an inky natural wine, as I often am. I don't remember what it said on the bottle. I'm going to be honest with you. I'm a little drunk. I had a really lovely pre-New Year's Eve brunch with my friend Josie, and we got oysters and shrimp cocktail and several cocktails, and it was really lovely. And I'm very happy to be here with you.
There we go. No, that sounds fun. Should keep it interesting.
So usually we talk about like what we're doing for fun. So what are you doing for fun right now, John?
I'm in the process of buying a car,
and that's fun. That's how you define fun.
I don't know. It's kind of weird. It's fun for like a financial planner when you like to analyze all of it, but it's also been a huge pain in the ass. People don't stop calling you, blowing up your inbox. That piece of it's been terrible. Nobody tells you the out the door price. It's not a great time to be buying a car. But I did settle on one, even though I didn't watch the Brooklyn FI video about it.
What'd you get?
I settled on a 2022 Subaru Forester.
You got a Subaru.
A green one too, nonetheless, much like
God.
the company vehicle.
Yes, the Brooklyn FI company car is a 2014 Subaru Outback. So welcome to Subaru family, John.
Yes, no, happy to be there. Leaving the Toyota family, joining the Subaru family. But yeah, what about you? What are you doing for fun?
Well, I have a quick car story. So when I was 23, when I was making $28,000 a year, I thought it would be a good idea to buy a Mini Cooper, or not a Mini Cooper, a Fiat, the Fiat 500.
Were you living in New York City?
I was living in New York City at the time. I was like, these cars are so cute. I'm gonna buy one.
And you could park them. That's the one type of car you could probably park in the city.
So I, called. I didn't actually go to the dealership, but I filled out some form online, and yes, they called me every single day for like 6 months, and I was like, I don't have any money. Stop calling me for this damn car. So yeah, buying a car is not fun. I'm glad you landed on a Subaru. I'm not doing that much for fun. I'm just trying to avoid getting COVID, honestly. I feel like everyone that I know has it, and
it's kind of crazy.
Gonna have a pretty low-key New Year's and not get sick.
You won't be in Times Square?
Not gonna be in Times Square.
Tonight?
Nope.
Basically?
Nope. It's really cold here, by the way. It's very freezing. So it's kind of a quiet week for IPOs. We don't have a ton of IPOs, but I do have a deep dive. Ooh, boy. So there's this company called Forza X1. Have you ever heard of this company?
I have not until I started prepping for the podcast a few hours ago. And I'm like, What could that possibly mean?
Well, Forza X, the company's called Forza X1, and they just filed their S1, so they're attempting to go public. And they create fully electric powerboats. So they want to. They haven't
electric
yet.
Powerboats. They need money first, is from what I'm gathering here.
Yeah, so they kind of look like floating like Chryslers, is how I would describe the design. Like they're kind of cool looking, but they're not good enough. Like
what I'm struggling with is like it's hard enough to find a charging station for your electric car, which I did not buy an electric car. But imagine trying to find a charging station for your electric boat, and the whole like electricity and water thing doesn't go well. I don't know. I mean, someday maybe they're just really ahead of their time.
I'm struggling with this one here. And like they're so in an
Yeah,
S1 they have to list all the risk factors, right? So the S1 is like describing their
it's quite a few.
financials. A lot of risk factors here. What do we have here? We are a startup entity and expect to incur significant expenses and continuing losses for the foreseeable future. So they don't currently have a path to profitability at all whatsoever.
Mhm.
We may be unable to adequately control the capital expenditures and costs associated with our business. So they don't have a plan to control their spending. Basically, they're trying to develop this product, right? They have an idea.
Yeah,
They need cash to execute it. So
they
that's why
filed some patents. It looks like.
they have a few patents, which is good. Some things beyond their control, a natural disaster, the effects of climate change, or disruptions at our manufacturing facility could adversely affect our business. Financial
I mean,
condition.
climate change can only help them, right? Like more water, more places to take your electric
Yeah, I mean, if
boat.
New York City is underwater and you've got your house on Long Island Sound, like hop in the Forza
You're gonna have to
X1,
trade in your Tesla for an
good
electric
to
boat.
go, right?
That's
Yeah,
yeah.
nowhere to land that helicopter. Might as well hop in the Forza.
I like my favorite risk factor was we have a large fixed cost base that will affect our profitability if our sales decrease. But there are no
There's no
sales.
sales to speak of to begin with.
Yes, yes. So I don't know how they could go much lower, but it's a neat idea. I mean, I think we're going to see electrification, spread beyond the car space. It's already in like the scooter, bike space, that whole thing. But I don't electric boats. I don't know if we're there yet. Maybe it's just me.
Yeah, I mean, there's so much money being made and trying to be spent right now that to me, like
Mhm.
any kind of luxury, cool electric gadget that's going to appeal to the 1% is like investors are like, sure, why not? Like we could probably sell 100,000 of these things, like no problem. Like sure, let's take this company public, like no big deal.
And am I right that they're looking to raise like $30 million or something
Yeah,
like
which is
that?
not that much money. Like
It's not that much money. I mean, relatively speaking. And like, are they quick to IPO here because they can't get VC money?
yeah,
I guess that's my question and what's in the back of my mind because you don't really see a path like this at all.
yeah. I mean, there's some weird thing about they have like a single shareholder. There was some like there's some
Mm,
weird corporate governance situation happening here.
hmm,
But yeah,
hmm.
the electric vehicle industry and its technology are rapidly evolving and may be subject to unforeseen changes, which could adversely affect the demand for both our boats or increase our operating costs. I mean, that means like
Now, I'd buy an electric boat if I could get a big tax credit for it.
true. Yeah,
How
I mean,
much are you going to give me on my electric boat?
yeah, I mean, we could see big policy changes and we start to see these big. That's why tax policy is so important, folks. Like tax policy
Hmm.
can actually change entire industries, right? But yeah, this,
Yeah.
you know,
Speaking of which, we've got a hot take coming up on tax policy here in a few
oh,
articles, right?
let's go there. I'm sick of talking about this electric boat company.
QSBS under the
Ooh.
microscope from the New York Times.
What is QSBS? Give me a 30-second
Yeah.
explainer of what QSBS is before we.
Oh, God. Okay, let's try this. Qualified small business stock basically means that if you invest early on in a startup that meets certain qualifications, has less than $50 million in assets, you hold the stock for more than 5 years, it's the right type of company. You didn't acquire those shares in the secondary market. There's a variety of other factors. There's a lot of legalese behind it, but basically you might be able to exclude up to $10 million in capital gains when you ultimately sell the stock.
So whether you get the shares by being one of the founders or if you're an early employee and you actually decide to exercise your options, that's a super key part of this whole discussion, is that you actually
Mhm.
own the shares at the
Correct.
point at which this company was a small company. Like you just listed off a lot of the qualifications. Often we have to get lawyers involved and both lawyers and the financial team to determine if the company actually meets the qualifications of a small business.
It's the company qualification that's the difficult part. Um, but yeah, I mean, nice article in the New York Times about how families, you have a tech startup, AJ. Let's say you go ahead and give your husband some shares, your sister some shares, your parents some shares.
I'm not giving my sister or my parents shit, first of all.
Okay, fair enough. But they're not worth anything at that time. Then your company's worth $10 billion, you IPO, and they're getting millions and millions of dollars tax-free for something they really didn't do any work for, and they might not have even really invested in. So it's kind of interesting. It's called stacking, QSBS, and um, you know, coming under the microscope. Again, I don't think anything's going to happen here.
Right.
But
I mean, so the deal here is, so any investor can basically shield $10 million in gains from taxes. They can pay zero capital gains taxes, right? Up to
if they take the risk and do all of this stuff, which is a risky thing to do.
Totally, up to $10 million. But with this loophole, whatever you want to call it, gift, stacking of this QSBS exclusion, you can replicate that $10 million to your close family. So if you've got 3 kids, living parents, and a spouse, that's another, what, $5 million or $50 million.
$50 million, yeah.
$50 million in gains that you can totally exclude. So if you have...
And it's per company. So if you're one of those serial entrepreneurs that has multiple companies, you can do it again at the next one and the next one and the next one. And so you could have people that have tens of millions, hundreds of millions of dollars that they don't pay any tax on because of this. I don't know how I feel about it. I think we've deviated from the initial purpose a little bit with this.
Yeah, I mean, it's great. It's honestly, the problem is having the resources to know about this, right? This is something that we know about and we talk to our clients about all the time. When we have clients who have these extreme exits where there's more than 10 or more than $20 million in long-term capital gains from an exit, this absolutely is part of the conversation. But, at that point, you've got your lawyer, you've got your financial planner, you've got your tax advisor to help you navigate this. Most people don't know about this. So if someone's going to have a regular old $2 million exit, they might not know that a letter from their company or a letter from a lawyer could actually make that gain completely tax-free. So that's where, my soapbox comes in, is let's actually make this more well known for people.
Absolutely. And it's one of those things where do you want to pay a lawyer $10,000 to get an opinion that might save you $3.8 million? Yes, absolutely. I'd love to.
Isn't that the beauty of lawyers, though? You have an expensive problem and then you pay an expensive lawyer.
You could shift some risk around, right?
Speaking of shifting risk around, you've got some article in here about record beef prices and ranchers.
Yeah, but the ranchers aren't getting the money. So yeah, I mean, if you've ever driven across the country, which I've driven across about 75% of the country through Iowa and South Dakota into Montana, you just see cattle grazing everywhere. I mean, it's kind of crazy. It's fascinating to see. And so you think wow, these ranchers must be loaded because they've got all this. Well, I guess since the 1980s, some of the larger meat packing companies have really consolidated, the Tysons of the world, and they control 85% of the market share for meatpacking. And so there's essentially a monopoly here. Speaking of which, I played Monopoly the other day with my family and lost.
You lost, John.
I lost. I was the first one out.
Oh my God, are you okay?
I was so pissed, AJ. You have no idea. Christmas is ruined. But yeah, I mean, this guy's a rancher that they talk about in here. He hasn't made a profit in 5 years, and so he might just sell off his cattle. He thought it was going to be a family business, but essentially, the big meatpacking companies control so much and control the price that there's really no game in town.
I mean, I know so little about farming and agribusiness, but isn't this the problem in agriculture also? Anytime we're talking about
big ag.
Yeah. Big agro, big cow here.
Yeah, I guess. I don't even eat beef, but I thought it was an interesting article. But
you don't eat beef?
No.
Oh, I
had a family member die from something called Creutzfeldt-Jakob's disease, which is the human version of mad cow. So I haven't eaten beef really my whole life. But yeah, no, it's
wild.
Interesting to see. A lot coming out here on the podcast.
I don't even know what to say about that. You've got this article in here about inflation. I don't care. Can we stop talking about inflation? Can you summarize this article for me?
I mean, people are worried about inflation still. No shit. I think that that's one of the fears that investors have going into 2022. And what do you expect? My Subaru is on a ship somewhere, not at the port of Baltimore yet. That's all I know about inflation at the moment.
I was just talking to my friend who was like, well, if inflation is such a fear, shouldn't I buy things now while they're still cheap before inflation really sets in?
Well, that's a problem. That's how you get inflation problems, right?
I don't think it works that way. And we both kind of sat there in silence for 20 seconds. We're like, I'm going to leave this one to the economists.
Yeah. I mean, it's funny though, because it's the best time for me to have bought a car would have been a year and a half ago when I could get 0% financing for 84 months because they were begging me to come in and buy a car, but I needed a car then. So it's interesting. Baby. And now everybody wants a car. Yeah.
I mean, we bought our Subaru in July of 2020. when, yeah, it was hard. It seemed like a good deal at the time. So I don't know.
Speaking of interesting things going on, AJ, you've got something
Are you
in
trying to
here
segue
about
me?
the.
Don't segue me,
I
John.
am. I am. Sorry. You've got a nice piece in here about the Zappos founder.
This is not a nice piece.
Yeah, I mean, a nice piece about why you need to do estate planning and make that your like number one New Year's resolution for 2022 if you haven't.
I mean, this story is, this really got me. Like I read the Zappos founder's book like a month before he died. Like horrible,
really?
yeah, horrible tragic death. You know, incredibly inspiring founder of Zappos, which was bought by Amazon. Like serial entrepreneur, charismatic guy, very troubled, died very tragically at age 46. There's a ton of and now we know died without a will, and he's worth what, a couple billion?
500 million.
Yeah. Oh, $500 million. And now everyone's coming for his estate. So there's no will to speak of. So we don't know what his final wishes are. We don't know, where he a will is a love letter to the people that you're leaving behind. So we don't know if it was meant to go to his sister or his parents or his friends. And now, of course, there are lots of people who want a piece of that estate. And it's very hard for anyone to figure out, whose claim is legitimate and who's just saying, oh, he promised me $1 million salary for the past 3 years and I never got it. And that's my claim against it. So it's ugly for the people who, if you're going to die without a will, it's really ugly for the people who love you, who have to deal with all this. A will makes it, wills can always be contested, of course, but for the most part, they make it pretty clear about what your wishes were. So this is definitely a cautionary tale.
I mean, how do you have $500 million and not have an estate plan in place from a tax perspective? That's just mind blowing. I mean, because I'm not a math wizard, but 40% of $500 million is $200 million in estate taxes, essentially, that you're going to pay. There's some strategies available, which is what we talk about with a lot of our clients that like you can do to help minimize that.
And we can speculate, like what happened. My guess, my speculation here is he meant to get to it. And he probably talked to some advisors and he felt like he didn't know who to trust. And at a certain point was just like, I'll get to it later. And then we have, a tragic death and we see this all the time. So get your estate plan done, no matter, whether you have $500 million or $500.
Yeah, agree.
That story, just awful tragedy. I don't have a good segue after that.
Yeah,
but,
no.
This is a podcast about liquidity events, and 2021 was a pretty crazy year for liquidity events. You've got an article in here about 2/3 of the companies that went public in the US this year are now trading below their IPO prices. What's the story
Correct. Yeah. Wall Street Journal has a great piece just taking a peek at the IPOs that happened this year. And there were a ton of IPOs that happened this year. And it's just kind of fascinating. I love the infographic because they look at how the price did initially and then how is it doing right now. And so a couple examples that came up, Coupang, which went public in mid-March. It's a South Korean e-commerce company. They had a great IPO debut. Their stock popped like 30, 35%. When they debuted in March. Now, from its listing price is down 16%. If you would have invested the same time in the S&P 500, you'd be up 23% over the same time period. And so, we talked to a lot of folks where it's like, oh, I don't want to sell right away. I don't want to sell shares. But a lot of times it makes sense to get some of that action out and get some liquidity. No pun intended.
Yeah, I mean, we're not here to give advice on this show, but a lot of the advice that we give our clients is behavioral. It's not necessarily, of course, we're super good at taxes and we understand the IPO markets better than most people, but at the end of the day, it's about controlling your own biases. So if you work at a company and you're like, I know that because this product is coming out this summer, the stock's going to go up 15%. It's like, you don't know. Now we have a public market.
We don't know.
There's millions
AJ,
of people.
You were bullish on Oatly, weren't you? Weren't you a big fan of Oatly?
Was I?
Wasn't that I don't know. I remember you talking about Oatly, the Swedish oat milk maker that popped like 75%.
No. I hate oat milk. I was definitely a naysayer here. Yeah, I despise oat milk.
Interesting.
It ruins anytime anyone puts oat milk in my coffee. It's disgusting.
I don't think I've ever had oat milk. So
my husband drinks almond milk. It drives me crazy.
More of a 2%er, one or 2%er myself. But yeah, Oatly's down 54% from their list price. Yeah. So interesting to see the data here at the end of a year of a lot of IPOs where many of them are below where they debuted.
Yeah. And that, for employees, it's it's always so strange because depending on like what level you are at the company, if you're in the C-suite, chances are you have a lockup where you can't sell your shares at the first or second day of trading. But for a lot of employees, there's usually this weird loophole. There's this weird opening where actually at IPO or direct listing or SPAC, like there is this really super brief window. Usually it's like the first day of trading and then what, like the 3 or 4 days after
two?
that?
Yeah. Depending. Yeah.
Where you get to sell, and usually you're limited. Usually you can sell like 15 or 20% of your holdings.
20% maybe.
And most of the time it's like, let's take advantage of that. Like we have this opportunity and we often get pushback, right? Which is like, I don't want to sell. Why would I sell? Like I know it's going to go up, but the data does not lie.
Opportunity cost. Gotta
Man,
think about it.
Dang opportunity cost. What else we got here?
Yeah, I mean, I'm glad I don't work at DoorDash.
Oh God. I don't
because apparently I'd have to deliver stuff on the weekends.
I don't know. I
mean,
honestly
it's an interesting concept.
Don't know what to think about this article. So
yeah,
DoorDash, the company that will delivers a lot of food. So if you order tacos, DoorDash will send a dasher to collect your tacos and deliver them to your door. The San Francisco-based company has actually made a company-wide policy that they will require everyone, whether you are a actual dasher and you're a minimum wage paid employee who relies on tips, or if you're a director of engineering making $500,000 a year with another $1 million in equity compensation, everyone at the company is required to experience being a dasher. I don't know how to feel about this.
Yeah, I mean, I'm a big fan of No Job is Beneath You, and I like that, and I think there's something wonderful about being reminded who your end customer is and who you're ultimately working with, and that's really important. I don't know if this is the best way to go about doing it from a human resources perspective and from attracting talent, but I'm not opposed to it. I was a little snarky at the beginning.
I'm not mad at this at all. Yeah, I mean, if you're an engineer working on the increasing efficiency of the app or the mapping system that the drivers are relying on, like, yeah, give it a go. Like, how frustrating is it as a driver to have a lag on some function of the app? Like, what better way to test it than to actually experience it? But yeah, I mean, I have
to go through it. I mean,
in reality, I'd be super pissed.
You and I go and do some of the tasks that we delegate and take them back sometimes as we implement new processes and try them so that we can see if they're broken or not. And that's really important.
That is absolutely true. Yeah, I mean, we will do data entry, which I will be the first to say, like, it is not a good use of my time to be doing data entry at this point, nor yours, John. But yeah, occasionally it's important to like get in that headspace and do the work to say like, oh, this actually does take too long. Like, let's completely change this process, because chances are the person actually doing that isn't going to identify new efficiencies, and actually the people who are higher up on the food chain might be.
You and I love to break things and redo them and drive the whole team crazy. So
rip it up
wonderful.
And start again.
No, this way now.
Exactly.
Collective eye roll from any BKFI employees listening to.
Oh my God, our employees definitely do not listen to the show, which makes me so sad. John, you're the only Brooklyn-ify employee who listens to Liquidity.
If you're a Brooklyn-ify employee listeing to this podcast right now, please Slack me.
Slack me
with the word
watermelon on Monday.
Watermelon. All right.
Anyways. So there's a labor shortage. There's a great resignation. I don't know who to believe. I'm honestly, I don't know. There's unemployment. There's everyone's minimum wage is stagnant. Everyone needs a job. Employers are not raising wages. We can't fill positions fast enough. Like, what's going on here? There's like a problem in Kentucky. No one's getting lucky in Kentucky.
Yeah, I mean, great article about kind of the 4 pieces driving up labor issues in Kentucky, basically. And I think one of the things that came out is childcare is a big thing, and the labor participation rate's down. And basically, labor participation rate meaning down is that unemployment can be low because there's a subset of the population that's not looking for a job, that has given up looking. I think it's because we're still in the midst of COVID. I think there's lots of childcare issues. I think there's lots of concerns. But hope you do want to see that go back up eventually. It'll be good for everybody.
Yeah, I mean, we can't. It's The childcare issue, unless you have children, which to my knowledge you don't, I don't.
Neither of us do.
Yeah. I don't think I'm actually allowed to ask you that, but I know you pretty well, and I don't think you have any children that you're aware of. But I mean, yeah, childcare is every time there's a spike, any working professional who had childcare, someone tests positive for COVID, daycare shuts down, the pool of nannies that you had to rely on, your parents who previously could take care of your young child who now need to isolate to keep themselves safe. Like this is like a massive, massive issue. And I just don't think employers are equipped to deal. I don't think people are equipped to deal with it. And the way that they deal with it is,
no.
Well, I'm going to prioritize my family. Like I don't have a choice here. I have to stay home. Our family will survive on one income or half an income, or I'll pivot and do something remote where I can be a virtual assistant or create an Etsy store or something like that where I can make enough money to survive. But I can't leave my kid at home to go do my normal job. This article specifically is looking at hospitality workers in Kentucky. So it's folks who work in hotels. And like, yeah, I can't go work a night
It's not a job you could do virtually.
Not a job you could do virtually, exactly. So I don't know. I mean, it does feel very much connected to the pandemic. And until we have, a vaccinated population and we start to change the way that COVID impacts our lives, we're going to be stuck in this, I think, for a long time.
Yeah, I agree. One last one that I loved in here, HA, was the Virginia family that got the Habitat for Humanity house. It was built in 12 hours with a 3D printer.
What?
I think that's fascinating. Yes. Yeah, 12 hours for a Habitat for Humanity house with a 3D concrete printer.
That's amazing. I back in the day in like Girl Scouts, we used to build Habitat for Humanity houses like way back in like elementary school, and it was a lot of fun. I love that organization.
Was this like the early 1990s or something?
It was the early 1990s. Thank you for asking. I remember getting this really cool shirt that had like manatees on it. That was like Habitat for Humanity. It was like humanity.
Okay, get it.
Like the pun.
Get
yeah,
it.
It was
yeah.
cute. Anyways. So this is the part of John, this is a very important part of the podcast where we talk about our no-brainer. So I would like to hear your first no-brainer.
My no-brainer is to invest in a good chair.
Ooh.
Especially since we're all working from home. Many of us are. I've been on the road a little bit. I've worked from my folks' place a little bit. I've been around. And you've got to have a good chair if you're going to be able to work all day. And so I have one from Staples that I love. I've had it since the whole time I've been in Brooklyn FI. And it's really made a difference. Are you going to shout out the brand? It's from Staples. What is it? It's a Staples brand. Yeah, I have the link in here. We could throw it in there.
Okay, cool. Cool. Yeah. Good to know. So my no-brainer.
What's yours?
Well, so I travel a lot. I'm like home a lot in LA. I'm moving around the country all the time, and I love coffee. Coffee is a very important part of my morning routine and waking up. And I can never it's not that I can't get good enough coffee. I'm not really a coffee snob. I just like want it when I want it, and I wake up really early. So I wake up at 5:30, and typically the hotel coffee in the lobby is not available till 7. So what the hell am I supposed to do for an hour and a half? Most hotels have removed, the coffee maker from their room, or it's like an espresso pod, which is fine. But often they just don't have it. They'll just say like, go to the lobby. So my no-brainer of the week is that I've spent the last 24 hours doing a lot of research on the internet to come up with my portable pour-over coffee kit. And I found this collapsible electric water kettle that folds up into like a CD case type thing, and a portable like thermos warmer with a pour-over filter on top of it. So I'm going to make my own pour-over coffee whenever I travel. So my no-brainer is to build your own travel coffee kit if you are a psychopath like me.
If you get up at 5:30 a.m. on vacation. Anyway.
All right. One last segment here, folks.
Your CEO crush.
My CEO crush of the week is Amanda Baldwin, who is the CEO of Supergoop. John, do you know what Supergoop is?
They make sunscreen, don't they?
Oh, did you know that because I put it in here, or did you actually know that?
I think you've talked about this before. Okay. This is a recurring topic.
It's like it's an incredible product. Supergoop is a ultra light sunscreen, prevents skin cancer. Like sunscreen is such an important thing that if you have shitty sunscreen, you won't use it. And if you have great sunscreen, you will use it, and then you won't get skin cancer. Anyway, Amanda Baldwin, she used to work on Wall Street, she's not the founder, but she came on as CEO in like 2016. We've seen like incredible growth from this company. Their revenue doubled in 2018 with 400% year-over-year e-commerce sales growth. Direct-to-consumer business has more than doubled from 2019 to 2020. I mean, she's crushing it. She's brought Supergoop to Sephora and Blue Mercury, which is like another retail chain. Love what she's done with Supergoop. And that's the show. John, you want to read us out?
All right. Email us at liquidityevent@brooklynfi.com. Leave us a voicemail and we'll play it on the air. Thanks for coming.
Thank you for co-hosting with me, John. It's been an absolute pleasure.
Thanks for having me. It's been great.
Take
Hope I get
care.
invited back.
Happy New Year, folks. See
Happy
you
New
in
Year,
2022. Bye.